Hi, I'm Lindsey with Global Markets Intelligence at S&P Capital IQ. About two-thirds of the S&P 500 have reported third quarter results, with 68% of the constituents beating the consensus estimate, better than the 66% historical average beat rate. After growth bombed negative 5.2% ahead of the peak weeks of October 19th and October 26th, a period where over 200 companies were scheduled to report, it began to make its typical upward trajectory. Now growth is projected to decline 2.6% on earnings per share of $29.27. Despite that encouraging 270 basis point improvement, we remain concerned that growth may not cross into positive territory for the third quarter, given we are entering final stages. The historic average quarterly beat rate is 400 to 450 basis points. If third quarter results were to come in at the high end of that range, growth would end up being negative 0.8%. Energy is weighing most heavily on growth, but that is not a new issue. In each of the first two quarters of 2015, energy earnings fell by 55%. Yet, the overall index was able to post positive growth in each quarter. The difference this time is that the materials sector is poised for an earnings decline of 14.6%. A decline that high hasn't occurred since the third quarter of 2012. Consumer staples are also projected to show lower earnings growth, and additional pressure can be attributed to weak growth from the information technology and financial sectors. They are the largest sectors in the index, representing over 35% of the market capitalization. Yet growth for each is pegged at between 3 and 3.5% for these groups. This is pretty weak compared to recent quarters. Helping to offset the negative focus has been the outstanding performance of the healthcare sector. Growth has improved by more than 600 basis points for the double-digit year-over-year increase in earnings. Beats have occurred across the board, with all subsectors showing improvement since the start of the reporting period. These results indicate that despite recent concerns, fundamentals for healthcare remain in place. The group has been a key driver of earnings for the past several quarters, posting double-digit growth in each of the previous 5 quarters, and we fully expect it to remain a leader this quarter. Until next time, I'm Lindsey with S&P Capital IQ.